What's up, guys? Welcome to Section 2, Episode 3 of Avrora Ground Zero. Today, we will be talking about bias. This was a topic that a lot of people wanted to learn about. I had a poll, and most of the people wanted to learn about bias, so here's the video on that. So, if you guys don't know what bias is arguably one of the most important things that you need to know, right? Obviously, there's trades that you can take that require no bias, right? But having a bias ensures that you know where price is going throughout the whole day, all right? So what does that mean? For instance, if you know that the market is supposed to go up today the whole day just because you have a bullish bias, you know that you're going to be taking a long, or you know that if you hold the long, you have the potential for it to really go, right? So today we're going to be talking about how you can find the bias and how it can further help you figure out your trade for the day. All right? So the first thing that you want to do when you're finding a bias is start out in the higher time frame. I go from the higher time frame down. So if I come right here, right, I'm going to go onto the daily time frame. On the daily time frame, I'm going to see where's price headed, right? Are we in an uptrend or are we in a downtrend? All right. Daily time frame sometimes is a little bit sketchier. It's not going to give you everything you need. So what do? We go into the 4 hour. On the 4 hour, now you could see a lot more action, right? You can see fair value gaps. You could see some of them get respected, some of them get disrespected. All right. So for instance, if we take a look at like this day, and I'm telling you guys this day because this is a specific day that we did trade. Take a look at the 4 hour. This is currently 2 p.m. Now we're going to go to the next day. And coming into the next day, you'll see this is the 2 a.m. candle. That means that it closed at 6. Because it inversed this entire fair value gap. You guys have watched the video on inversions. This is how I find the bias. Because this entire fair value gap got inversed, I'm going to be bearish. What targets do I have? Well, down here I've got a 4 hour unfilled. That's a good draw on liquidity, right? So now I know that I am bearish. The market is extremely volatile, so I could look to take a trade. If we take a look, if we skip ahead to 10 o'clock, you'll see that this fair value gap got inversed. What does this mean that I'm now looking for, right? If this fair value gap held, I could have potentially had a long up to, well, like an unfilled fair value gap up there, right? Next thing I'm going to do is go onto the 1 hour, all right? Take a look. This 1 hour got inversed right here. 6 a.m. candle, the 8 a.m. candle, which closed at 9, inversed this. That's why we're bearish, all right? There's no need for us to be bullish. We're clearly disrespecting bullish PD arrays. Okay, so what does that mean? If I come onto the chart here, you're going to see the setups that we can take. You're going to see that we get fair value gaps that inverse and that you could take. You would go break even, right? And it would play out, right? Take a look at this, right? You got your entry right there, 1 minute inversion. Your entry is going to be right there. Your stop can be above, right? And you can be targeting anything that you want. You could be targeting that 4 hour that we've got all the way down there, right? And then if you happen to get one of those range days, you're going to hit that target because this is the draw on liquidity. This is where market is headed to. Draw on liquidity is also extremely important, right? Take a look at this. And hold on. We might get it. We might not. Boom. We got it right there. You guys understand this entire concept here. You're looking, the way we find our bias is by looking at what market is doing pre-market. Literally, that's why I don't like when people ask me in the chat, right? They're like, what is the market going to do on Monday morning? And they ask me that on Friday night. I'm like, dude, I don't know. I'm going to look at the market 5 minutes before it opens. I'm going to see what is the 4 hour doing? What is the 1 hour doing? Are we respecting fair value gaps? Are we disrespecting fair value gaps? And like that, that is how we found our bias for most of these days, guys. If we take a look right here, we go into the 4 hour, you'll see the second bullish PD arrays are disrespected, market shifts. Look at this. There was a fair value gap right here. This is July. This is a long time ago. Fair value gap right here, it inverse closed below. Now we're bearish. Look at what happened the next day. Dump, right? And honestly, go into the market, right? This is what we do every single morning, guys. Right before the market opens, I pull up the 4-hour chart and we talk about the bias, right? Like, what is market realistically going to do? When the market opened yesterday, it opened a new week opening gap. We know that when the market opens up a new week opening gap at the start of the month, or at the start of the day, sorry, and it's the start of the week, right? There's a new day opening gap and a new week opening gap. New week opening gap forms when the market opens at 6 o'clock on Sunday, all right? New day opening gap is just when the market opens on any day, right? It's just because a new week has started. And usually when you get a new week opening gap, it's going to get filled New York AM. And if we take a look, that's exactly what happened right there. Boom, bearish bias, okay? Now, of course, what goes up has to come down, right? Just like when you buy a stock, it goes up, it goes down, it goes up, it goes down, it goes up, right? You can still, if you know that the bias is bearish, you can still take longs, right? Like if we know that here price is moving up, we could still short this, right? Or we could short this, and then we're going to get a potential of price either of this being the high, the top, and we caught the top, or price is just going to retrace into a fair value gap, a high time frame fair value gap, 1 hour, 4 hour, 15 minute, 5 minute, right? And then price is just going to continue even higher, but you're still getting that trade. And that is how you can align your bias to your trading. Just because you're in a bearish bias, the market has to have pullbacks. It needs to have retracements. And if you can identify all of that, check out the video on the fib. Check out the video on inverse fair value gaps if all of this is rocket science and you guys don't know anything that I'm saying here. All right? And if you guys have any questions about the bias, make sure that you ask me in community chat because I'll be more than happy to help you out. I hope to see you guys in the Discord. Link in my bio.